Good morning, everybody. Thanks for coming. Thanks for everybody coming in the room. I want to let you know we are webcasting this event live, so we do have a remote audience as well. So thanks for all of you who are also watching over the webcast. My name is Jamie Zimmerman. I know some of you out there, and I'm the Deputy Director of the Global Assets Project here at the New America Foundation. For those of you who don't know, the Global Assets Project is a joint venture between the Center for Social Development at Washington University in St. Louis and the Asset Building Program here at the New America Foundation. And the Global Asset Project is focused on promoting new ideas around products, policies, and initiatives that spur savings and asset accumulation for the poor around the world. So, I wanted to talk a little bit about why the Global Assets Project is so interested in conditional cash transfers. For those of you, there may be a few of you in the room who aren't as familiar with conditional cash transfers, so I wanted to just give a basic definition, as CCTs are basically an anti-poverty social policy tool that provide monetary benefits to individuals and households on the condition that they fulfill some specified behavior. So there are some great resources for more in-depth definitions. One of our panelists, Michelle Adato, has written a really great 4-pager on the topic, which we made available outside. So if you may have picked that up, but if you want some more information, I would definitely encourage you to grab one of those. So for the Global Assets Project, our main interest in conditional cash transfers is what we see as their potential to serve as a gateway to poverty reduction through facilitated asset accumulation and financial inclusion for the poor. We see this as currently a great potential, but an unmet potential. But why do we see CCTs and financial inclusion as something that's a possible and powerful tool? Well, first, they're highly scalable. CCTs as a social policy and social investment tool are immensely popular right now, with programs in place in over 30 countries. I don't know the updated number. Someone else probably on the panel does know. In both developed and developing countries. And the delivery for CCT payments is evolving rapidly with innovations in branchless banking and technology that facilitates access to financial products. Secondly, they are also highly adaptable and can be tailored to reach specific goals, making this concept applicable in a variety of contexts, from a small village in Tanzania all the way to the city of New York. So we believe that there's currently a great opportunity to explore new and innovative policy pathways towards poverty reduction, not just in the developing world, but in the entire world. So we were really grateful to team up with Yves Moury and the Proyecto Capital to explore this idea further, and collaborated on this paper, Savings-Linked Conditional Cash Transfers, a New Policy Approach to Global Poverty Reduction. And there certainly seems to be a lot of momentum behind this idea of savings-linked CCTs, at least in some places. And as some of you know, the Colombian government has recently announced plans to connect its CCT program directly with savings accounts in a mass effort to achieve financial inclusion in their country, when we're talking about up to 3 million accounts for previously unbanked poor Colombians. So it's really exciting. We'll be hearing probably a little bit more about that later. So I just wanted to tell you the plan for the morning. Eve and I are going to speak briefly on the paper, and then we're going to turn it over to our panel for them to react to the paper, react to the concepts and recommendations presented within it, and then we're going to open it up to Q&A. You can ask Q&A to both Eve and myself, but also I encourage you to take advantage of this entire panel that we have here with us today. And just as a reminder, again, we are webcasting this live, so I just ask for you to introduce yourself and speak directly into the microphone when you ask your question, so that this will, not only for those who are watching live on the webcast, but also when we rebroadcast this over YouTube, and this stays live forever, so just keep that in mind, please. Okay, so I'm just going to speak briefly, give you a little bit of an overview of the paper before I turn it over to my colleague Eve. So in a nutshell, this paper is exploring the question of whether linking CCT programs with savings and financial inclusion can make them work better for the poor. And the idea that we have is is this a means for providing greater returns for governments on their social investment programs? In the paper, we specifically ask the following questions and address the following questions. If CCT policies are effective in influencing positive behavior changes among the poor with respect to health and education, which they've been proven to do, could adjusted models have similar effects regarding economic and financial behavior? That is, if they can be successfully structured to promote investments in health and education, could they also be structured to create opportunities for the poor to enhance their financial and physical assets and invest in their own economic development? If they can help families develop their human capacities, could they also help them build financial capital necessary to pull themselves out of poverty? And given their cash-based structure, could CCTs provide the foundation for financial inclusion of the poor, the vulnerable, and the underserved? So we believe that with a little bit of tweaking and some innovative adaptation, the answer to all of these questions is yes. We believe that conditional cash transfers could provide greater socioeconomic dividends if they were structured to help individuals and families develop productive assets. And so to do so, we posit that the CCTs and other social protection programs in the poor should focus on 5 different factors. 1, inclusion of the poor in the formal financial system, and hence the formal economy. 2, the accumulation of financial capital by the poor. 3, fostering the productive use and productive investment of accumulated assets by the poor to meet their economic goals. 4, a mechanism for moving the poor out of social protection networks and out of poverty into the formal economy and into self-sustainability. And 5, providing access to other tools that will protect the assets of the poor and reduce their vulnerability to economic and personal shocks. So beyond explaining the rationale for savings-linked CCTs, which I believe Eve will discuss with all of you in a moment, the policy brief also makes some concrete recommendations for connecting, combining, and adjusting CCTs to meet these goals. As a caveat, in the paper we pose a few different models. We don't believe that these are the only possible policy models available or worth considering, but we present them as an illustrative range of models and provide some food for policy thought for all of you, for our panelists, to provide some feedback to us and to hopefully spur some greater innovation around this concept. So I'll briefly just tell you what the 4 policy models are, and then I'll turn it over to Eve. So our 4 thoughts on possible policy linkages are, first, the most simple, a simple linkage, simply depositing payments into a savings account, using the CCT platform. And we feel like this may provide enough infrastructure for financial inclusion in and of itself, just putting together the payment and the account. Research has shown that the mere presence of a savings account has a positive effect on individual savings behaviors and attitudes. On the other hand, we also contend that this model is a bit weak in its ability to explicitly spur long-term asset accumulation and future-oriented attitudes among the poor and beneficiaries. So there are 2 other models that we look at that are a little bit more purposeful, a little bit more intentional. One is called a personal capitalization account. Some call them PCAs for short already. And this design includes 3 main components. One is a matching grant as a reward for opening an account, conditional subsidies into the account to reward and strengthen savings behavior, and the facilitation of the poor's investment of their assets in productive activities. Eve will discuss, I believe, the PCA in greater detail with all of you, but that's a very basic overview of how that account is structured. Another form of PCA that we discuss in the paper looks at child and youth accounts. And I thought that might be my phone. And looking at how the PCA model, a little bit more purposeful and intentional model, could be structured to focus in on the needs of children and youth. Since existing savings programs for children have shown positive effects on both social and economic outcomes for that group, and we believe that CCTs could be easily tailored to meet specific child or youth-focused goals such as continued education, future productive investment, and providing these populations with a jump start into productive and more stable future, encouraging self-investment and gradual wealth accumulation. And fourth and finally, we look at the connection of CCT, savings-linked CCTs, with microinsurance and other financial services. We don't really explore this that much in detail, but we recognize that the vulnerability of the poor and the very poor to personal and economic shocks, and recognize that this is something that would need to be addressed in the creation of adapted CCT models. And as the assets of the poor grow, their financial needs also evolve, and that has to be also taken into account when you're designing such programs. So for how these models could and do work currently around the world, and why thinking about this is important and where it's all headed, I'm going to turn it over to my co-author, Yves Maury, but I'm going to introduce you to him first. So Yves is an economist and commercial engineer hailing from Belgium, yet spending most of his professional career focused on poverty reduction worldwide, having worked in Europe, Asia, Africa, and most extensively and recently in Latin America. He's been a project manager, consultant, and advisor in international development since 1980 in a variety of multilateral institutions, government bodies, and ministries, bilateral and national development agencies. I could go on, focusing mainly on pro-poor advocacy, microfinance, poverty reduction, and asset accumulation strategies for the poor. At present, he serves as CEO of Edge Finance, a consultancy focusing on small business banks and microfinance institution re-engineering and mergers, microfinance commercialization, and financial asset building issues. He is also the director of Caja Rural Los Andes, a small regulated rural bank in Peru, serving low and very low income rural clients, including poor farmers. And he is also co-founder and executive director of Fundación Capital, a specialized nonprofit institution aimed at asset building for the poor in Latin America and the Caribbean. Fundación Capital is presently managing, with the Institute of Peruvian Studies, a social science research institution in Peru, a regional project called Proyecto Capital, which promotes linkages between CCTs and innovative savings mobilization mechanisms in order to achieve mass financial inclusion. And even with all of that he's currently presently doing, he has also had the time to write this paper with me and fly up to Washington, D.C. and talk with all of you about it. So I'm really grateful for all your time and energy. I wish I had as much as you. So I will turn it over. I'll turn it over to you, and then I'll be back up and after Yves has concluded his remarks to introduce everybody else. Thanks.
Thank you, Jamie. Hello to everybody. My name is Yves Maury, as you said. Please excuse my poor English because it's quite poor. I can't do anything about that. Okay, I will start telling this. For each and every complex issue, there is a simple, crystal clear, and false answer. So we are going to speak about a complex issue, and nobody knows exactly what we have to do when it comes to banking the unbanked, and what exactly we have to do, what's the best way when it comes to popular savings mobilization. There are few experiences worldwide, and we are just creating new tracks, I hope so. Before forgetting, a warm thank to New America Foundation, to you, Jamie, to Ray, to Ford Foundation supporting our work, to our distinguished panelists, and all of you being here to share and learn. I want to extend a special thank to my colleagues in different countries in Latin America. Without them, nothing is possible. And Maria Clara, Beatriz, Rita, Ivan, Pablo, Veronica, David, Angelica, and all the other involved, thank you very much. I think I will stop thanking people because I could speak much more about thanking people. Okay, there is something very troublesome. I will speak from a Latin American perspective, but I think it's quite worldwide. Poverty remains present. Poverty is not reducing. In absolute terms, at least in Latin America, poverty is even growing. We still have 12 million people living with less than half $1 a day in Latin America. Maybe, I don't know, maybe we should start to think about new practices and stop mutually reinforcing our convictions between colleagues. Finally, we are taking a soft line on real impacts, in particular when we speak about microcredit. I will speak a bit about that if I have time. To say it shortly, foreign aid is not effective enough. Okay, when it comes to fighting poverty, there are two big instruments that most governments, are, at least in Latin America, worldwide, are using. CCT programs, conditional cash transfer programs, and microcredit, to say it in a way. CCT programs have got two advantages. The first one is short-term, of course, because it increases consumption levels, so it's smooth stabilizing families and families' consumption, and a long-term effect, supposing conditionalities are met, usually children education and health. It's supposed to reduce the intergenerational effect of transmission of poverty. The problem with CCT programs is that they usually do not have, or they don't have well-designed exit strategies. Right? I'm looking at you, Michel, you know more than everybody about that. They don't have exit strategies on the medium term. That is, how do we design accompaniment programs to the beneficiaries for them to stop being beneficiaries in the medium term? I think it's a huge weakness of CCT programs. On the other side, we have microcredit, and I say microcredit and not microfinance because, as you know, billions of dollars have been spent on microcredit. Dale Adams would say, indebting the poor, and in fact, there are no evidence of a strong linkage between microcredit and poverty reduction, again, worldwide. Let's take two examples, Bolivia and Bangladesh, for instance, two countries with a highly developed microcredit industry. And as far as I know, poverty remains poverty in Bolivia and in Bangladesh. In Bangladesh, almost all families, for instance, have access to credit. And it's just easy to observe that poverty remains almost the same. I read a paper 2 years ago from Thomas Dichter, I don't know. It's a great article that Dale Adams gave me a couple of months ago. He said basically this: formal credit is a result, it's not a cause. There is ample evidence that growth came first and credit comes after. The problem is that we did exactly the contrary. I mean, we started with credit and micro-debt when we should have started with savings probably and insurance. 95% of micro businesses in the world are financed with savings, money from the own pocket of the entrepreneur or money from families and friends. In fact, self-financing or borrowing from a closed social network is generally being used for business startups worldwide, as I just said. In short, such informal saving mechanisms and loans are prevalent not because of a lack of access to formal financing, even when such lack of access may be the case, but because they are preferable to the borrower from a financial risk standpoint. In the current microfinance movement, everything has been done with credit in mind. The movement began almost exclusively with credit, then much later and reluctantly sometimes began to talk about savings. And only now are we beginning to hear talk about other services such as insurance. This is taken from this paper from Thomas Dichter. So credit is not a human right, as it's been said before. Credit is not for everybody. The poor and the risks they face require appropriate financial products, mainly saving and insurance. Saving mobilization is key as a main source of private capital for small business banks and MFIs from the financial institution perspective, and as the basis of all other financial services from the customer perspective, and as the main tool for building and protecting assets. Maybe we're going to talk about assets later. I'm afraid I've got no time to enter in details about this right now. So we are not responding to demand. In fact, poor people require and ask for deposit-taking services, mainly, and insurance, and we do offer microdebt. There is something that we saw very, very interesting, and that is the following. Savings mobilization may have and has an effect on the medium term because of its asset building, asset generation, the asset building it allows and it makes possible. CCT programs have got small-term and long-term effects, so it's easy to understand that they might be very complementary. CCTs are basically income-based policies. They want to increase the consumption level of families, and saving mobilization schemes are basically asset-based because financial assets generation, accumulation may allow investment of those financial assets in other classes of assets, basically productive assets. So we decided to try to link CCTs and saving mobilization schemes. We have two experience, and two previous experience and one current experience. The first one is the oldest one, and it's the IDA, Individual Development Accounts in the United States, since about 20 years. It's been invented basically by Michael Sheradin, thanks to him. The other experience we have, IDAs represents about 83,000 accounts in the United States at present. On the other side, we have two pilot projects. I had the opportunity and the luck to design about 6 years ago, the first one, and 3 years ago, the second one. That they are saving mobilization schemes based on explicit subsidies, matching grants. The more you save, the more you receive. You receive a matching grant when opening an account. You receive another mechanism of matching grant when you save, and you receive another matching grant when you invest your savings, accumulated savings, in productive assets. How long do I have? Do I have? Okay. So, these two pilot projects in Peru are a system of subsidized savings that for a limited time, usually 24 months, depending on the case, encourages and financially rewards low-income rural women. When I say low-income women, I mean less than $1 a day, living in the remotest possible areas you can imagine, indigenous women. Rewarding them when they open a personal saving account in regulated banks of their choice. when they develop a discipline in regular savings, rewarding savers' monetary saving effort by means of slightly subsidized interest rates. And the goal is for them to become familiar with former financial institutions, of course, and ultimately have the ability to invest based on the savings they have accumulated and possibly complementary source of investments in personal assets. It's ideal-like, it's based on individual development account systems. It's also based on ROSCAs, rotating saving and credit associations schemes, because there is a group saving discipline built in, and with deposit collectors like Susu collectors, for those who know about that. Outcomes of those pilot projects in Peru, this is very interesting. We have about 20,000 accounts opened at present. The first pilot project has been investigated already by my colleague Carolina Trivelli. Okay. On average, women less than $1 a day deposited almost 500, more than 400, between $400 and $500 in their account in 48 months. $400. Of course, there are withdrawal, deposit, withdrawal, deposit. For each dollar paid in matching grants, the women deposited nearly $6. The savers used with regularity their accounts and their savings, withdrawals and deposits, at the end of the matching grant mechanisms, 24 months, the savers had a balance of about $250. And that's $250, that's really impressive for women with less than $1 a day. Of course, it's not raining money, and those savings are coming from somewhere. Might be remittances, might be probably a transformation of other traditional forms of savings. We don't know yet, and we need to learn more about that. Okay, so based on all this, we decided, thanks to Ford Foundation supporting us, to launch a big regional project for all Latin America and the Caribbean, linking CCT programs and those saving mobilization schemes. We are at present working with Colombia, Chile, Peru, Ecuador, Mexico, and I'm forgetting one, I don't remember, sorry. And we are going to work soon in the Dominican Republic, in El Salvador also. Why is that? The goal, as I said, poverty is troublesome. The goal is to scale up. We found that CCT programs are an ideal institutional vehicle to drastically scale up. I mean, in Colombia, for instance, we are going to bank, thanks to our great Colombian colleagues we have there, we are going to bank 3 million poor people. We are going to mobilize their savings, 3 million people, and that is being done right now. We are in talks with Ecuador for 1.7 million beneficiaries. We started pilot projects in Peru with the aim to reach 500,000 beneficiaries. So it's huge. I mean, we think we can reach millions and millions of people with such a mechanism. We think it's good for CCT programs because we are improving the way they work. We are making them cheaper, because it's cheaper to transfer money to a saving account than all other systems that are being used at present. We think we do complement what the positive effects of CCT programs with an exit strategy in the medium term, asset building strategy. And we think that banking the unbanked is the best way for those poor people to increase drastically their self-esteem, have a different view on the future for themselves and their families, and maybe get out of poverty for some of them. Thank you very much.
All right, thank you, Yves. So I'm just going to briefly introduce our four commentators this morning. I'm just going to go ahead and introduce all of you so I don't have to keep running up and back and forth. And I'll present them in the order they're going to speak. Okay, so for the first panelist this morning will be Luis Tejerina. He's an economist with the Social Protection and Health Division of the Sustainable Development Department at the Inter-American Development Bank. He holds a master's from University of Maryland and works on social protection projects and studies for Latin American countries, and has had experience in the design and analysis of CCTs, as well as research about financial inclusion and the use of financial services among low-income households. And he's currently part of an initiative at the bank that is studying the effects of financial inclusion through CCTs in Latin America. The next panelist will be Michelle Adato. She's currently standing in the audience due to a back injury. She wanted me to let you know that she's not, no other reason that she's not joining the panel other than and when it's time for her remarks, she'll come up, or whenever you're ready, you can come up and sit down. And I'll go ahead and introduce you now, since you have the floor anyway. So, she's a senior research fellow in the Poverty, Health, and Nutrition Division at the International Food Policy Research Institute. Most of you probably know as IFPRI. She leads IFPRI's global and regional program on large-scale human capital interventions, focusing on social protection initiatives that strengthen assets. She also leads the research theme on AIDS, community resilience, and social protection for IFPRI, and is currently starting research on the use of CCTs for reducing HIV/AIDS risk among adolescent girls, and has conducted research as a principal investigator on CCTs for the past 10 years. Let's see. And third, we have Mark Pickens, microfinance analyst with CGAP, the consultative group to assist the poor. He works on early-stage efforts leveraging technology into banking services for the poor with CGAP's technology program. Since 2005, he's co-authored CGAP reports on customer adoption, business models, and regulation with mobile banking, and is currently also investigating the link between government-to-person, or G2P payments, and financial inclusion, with a paper coming out shortly on this topic as well, and scenarios for how technology will affect access to finance through the year 2020. And finally, it's Marguerite Robinson. For most of you, she probably needs no introduction, for those of you in the microfinance crowd. But for those of you not familiar with Marguerite's amazing work and illustrative career, I'll start by saying that Marguerite is the only panelist this morning who's not directly coming from or working with currently the CCT world, but has an extensive history working on microfinance and is an expert on savings. Marguerite is an independent consultant on microfinance and social and economic development, is a prolific speaker and writer on microfinance, including savings, and most recently the author of the highly acclaimed book, The Microfinance Revolution. She has an extensive overseas field experience with work in more than 20 countries in Asia, Africa, and Latin America from 1962 till today, and has held numerous consultative and advisory roles around the world with governments, banks, MFIs, NGOs, and foundations. So you name it, she's done it. And we're privileged to have her and the rest of the panel with us today. And I'll just hand it over to Luis, and we'll just go down. Up to you, however you feel most comfortable.
How long do we have? 2 hours?
Yeah. Keep it brief if possible so we can have time for Q&A.
Okay. So the way in which I organized my comments on the paper was based on my own evolution on this in this area. I work in a division that is mainly focused on the design of CCT programs, and I became interested in the possibilities for financial inclusion through the programs probably 1 or 2 years ago, and started talking about the idea and discussing with different groups and receiving some different types of feedback, positive, negative, very negative, and it was an evolution, as I said, and I don't think my position on this is 100% clear. I think every week, every day is maturing, but as I read through the paper, I took some notes, and I agree with 90% of what I will say. I included some things that are things that I heard in meetings, and are things that everybody who's discussing financial inclusion through CCTs is likely to hear from somebody at some point. So first, let me recognize the merits of the paper. I really enjoyed reading it, and I have done a couple of these exercises of reviewing cross-country experiences, and I know that by the time you reach Venezuela, everything in Argentina has changed, and you have to start again. So it's a tough job, and I really appreciate the work. So the main focus, I agree with the main focus of the paper. I think that there's a lot of potential in moving towards an increased focus in savings for low-income households. I think the scale of the CCTs could be taken to our advantage in this process. However, I don't think it's that clear that it is the programs themselves who should be encouraging this movement towards savings. I mean, they can do things about it, but it's not so clear to me that they should be the ones providing the actual incentives or including it as an objective of the program. That's the only word I underlined from the document, actually. So at the IDB, we're starting an initiative, well, continuing an initiative, to understand better what's happening to the beneficiaries that are going through this process. We have already a study finished for the process in Argentina. We're starting the process in many other countries, and basically paying attention to which country is starting the process to try to have the best design, try to capture the information. And as I list some anecdotes later, you'll notice that it's really important for us to understand all the potential positive and negative effects that may be happening in this process. Screen went black. Sorry. Let me mention, I think there's an asymmetry between the persons who come through from the microfinance field and the persons who come from the CCT field. There's an asymmetry in what they think about how poor households look like, what are their potentials, and one of the examples that became clear to me is when I was doing some analysis about the effects of the transfer on the percentage of households with a savings account. Whenever I showed my results to people who came from microfinance, the reaction was, this is too low. And whenever I showed the results to people in CCTs, are you sure this is too high? So, and that summarizes a little bit of the way I think a lot of people think. From the CCT perspective, there's a lot of people who think these people are really poor. They cannot save, or they shouldn't be saving. They should be spending in nutrition, education. And from the microfinance field, there's a lot of people thinking anybody can save a very small percentage, but that's something and can help them eventually get out of poverty. So I think there's an asymmetry, and at some point it'll have to be resolved, and people will have to discuss. I think there's evidence. We've been working a little bit. If you believe household surveys, which I think are perhaps the worst source of evidence, except for all the rest, to borrow from Churchill. I think that we do have some evidence that the poor are using financial services, formal and informal, to cope against shocks or to make their investments. If you look at the savings rates, for example, or even credit rates in households, you see the gap is not so big between the poor and non-poor, and until you start looking only at formal services. You see that informal services are covering a lot of the gap, and they may be not the best alternatives. They may be very costly. But I think we do have the evidence that these things are being used. We have a low percentage of poor households with savings or credit, but with the percentage of households that answer, I use my savings or my credit either through, if they consider savings their own assets or credit from friends, they are using these instruments to cope against shocks. When you say that people are receiving the payments through banks, you really need to qualify and understand a little bit the heterogeneity there is in the way the services are provided. One example is the Bansefi example in Mexico, that right now they're thinking about jumping into the debit cards, and they do have the savings account, but if you look at the schedule of operation of Bansefi branches, they close at 4:30, and that's a big problem in urban areas where a lot of the beneficiaries have more formal jobs and cannot really ask to leave just to go to the ATM at 3 p.m. And the coverage of ATMs, of Bansefi ATMs, is very low, although it's I understand they're investing in expanding their network. And also, if they want to use the ATM network from the financial sector, they have to pay fees to use the network, which are not negligible given the income level of the households. I think the evidence that we have in terms of CCTs and financial and increased their effect on increased savings, I mean, the evidence cited in the paper is what we have, and we should use it, but it's not. I think it's far from conclusive. The evidence in Paraguay, for example, compares consumption with income and the changes in that, and translates that as savings, which I think has problems. The evidence from the study in Mexico is not really the what you would like to see in an evaluation, which is you would like to see people, those who started using savings accounts and how their behavior changed, which I think is not really what that paper does, but I mean, it is what we have, and we should use it. But I really think we should invest a lot in understanding these things better. I think it's an opportunity for financial institutions. It can be looked as an opportunity. The scale of these programs is huge. So even a low percentage of take-up in terms of savings accounts has to have a big meaning for in terms of number of clients for a bank. But as far as I've seen, there's little interest from the private sector in participating in the calls for proposals from the programs. I think what I've seen in Mexico, El Salvador, Colombia is just a little interest, be it because they understand how the poor can save. That they have a poor understanding of how the poor can save, or maybe it is really costly. I don't know, but what you see is that there is little interest from the private sector, and I think that there should be more research, and if there is an opportunity, it should be shown to the private sector that there is this opportunity and it's financially feasible. It's not clear also that it can reduce the administrative cost for the programs. I mean, I think it can reduce. It could reduce the administrative cost for the programs, but for example, what's happening in Colombia, it's not clear that it'll do that, at least in the short term. So I mean, I think it's a possibility, it's a potential, but we have to take care that when this happens in the field, it's actually oriented towards making the programs more efficient, which is what the programs are actually interested in the first place. The majority of the people I spoke within the programs are not looking at this process in terms of financial inclusion, but in terms of increased efficiency and outreach to the beneficiaries. We have to think that lack of access is not a problem only for the extreme poor. It's a problem for the population as a whole. The rate of access of savings accounts in Latin America is very low for any group that you want to consider. So and these programs are interacting with the bottom 2-3 deciles of the population. So if we do a strong effort to include them, we'll have a huge jump in access for the 3 deciles and still a very low access for the deciles 4, 5, and 6, for example. So there are things that we should think about in bigger terms, in terms of increasing financial access. The middle class doesn't have it. Well, let me list just some anecdotes. I don't have much time, so I wanted to finish with some anecdotes from the discussions that I've had about this, and I think they serve to highlight the lack of a strategic view of this process within the programs, the need for understanding what's the effect on beneficiaries, understanding how beneficiaries view the programs. In one of the countries I was working in, I spoke to the director of the program, and she told me that yes, the movement will include savings accounts. When I spoke to the people in the mid-level management of the program, they told me no, because we use the movement in the account as an indicator that the people are actually using, are actually retiring using the money they give them. So if they don't take the money out in 3 months, we would like it to be given back to us. And the promoters of the programs, while they told me that they think it would be useful for the beneficiaries, they were told that they should tell beneficiaries to take all the money out as soon as it is transferred. So the actual training they were giving to beneficiaries was, as soon as you receive the transfer, go and take all the money out. Don't even think about leaving any balance. And as far as I understood it, the problem wasn't a problem in the banking sector. They were willing to offer savings accounts. So that wasn't the problem. So if in that case, if you have an organized effort to make use of the willingness of the financial sector to offer savings accounts, you have a low cost, high potential intervention. The other thing that may happen is that the beneficiaries have a low understanding of the actual product. Some of the examples, and I'm sure you heard of them, but people who were told that, were given the cards and were told that this card is very important, please don't lose it, and they laminated some of the cards so they weren't able to put it in the ATM. So some people who were, they heard the ATM talking to them and they were talking back to the ATM. There was more. Well, I think those are the main ones. But I think what this highlights is that whatever is done, we need to understand that an effort towards this direction should really be accompanied by close monitoring of the effects, how the people understand what they're doing, do they really understand the cost benefits of the program, and perhaps one way in which the programs could participate in this is through financial literacy, really educating the beneficiaries in terms of what they can and can't do with these savings accounts. So I'll close with that. Thank you.
I just want to start by thanking you for having me here, and I would like to congratulate Jamie and Eve on what I think is an excellent paper, and also the progress that you've made through Proyecto Capital and all your other organizations that you're working with, as well as the progress that the New America Foundation has made on promoting this idea. I first heard about it at a meeting with the Ford Foundation back in 2007, at a very early stage of discussion, and I think it's really quite impressive how much I'm hearing people talking about the idea and the extent to which a number of governments are looking at it seriously. I think that the intervention that we're talking about today helps to answer three essential criticisms, three core criticisms of CCT programs, plus a fourth that is less essential, but it's nevertheless important. And the paper doesn't actually set itself up as a criticism to CCTs, and I think that that's positive given the sort of audience that you want to reach. I don't think it was necessary to set it up that way, but I just want to make that link to what I think that the sort of gap that I think it fills. The first criticism is something that I think was well represented by a quote from Santiago Levy. He spoke at IFPRI a couple of weeks ago. He is currently a vice president at Inter-American Development Bank. He was the former deputy minister for finance in Mexico when Progreso was conceived, and he's largely considered one of the prime architects. Just a bit of background to his comment briefly. We know that CCTs have two primary objectives. One is to transfer direct income in the short term, and the other is to break the intergenerational cycle of poverty. It really is seen as an asset building program, and in terms of the language and communication between the two programs, I think it would be useful to talk about it in terms of assets because it does directly attempt to build human capital assets, health, education, and nutrition. So maybe not to set those two up against each other necessarily, but nevertheless, that's the primary concept that, and when you look at the history of the development of the idea, it was trying to understand the interactions between early childhood, malnutrition, poor health, and lack of access to education, and ultimately the effect of those on adult earnings and long-term poverty. So CCTs are intended to break that cycle of poverty and therefore reduce it in the long term. And what I thought was interesting about Santiago Levy's talk recently was that he ended it with a statement that despite the successes it had had in meeting its human capital objectives, that, quote, it is unlikely that CCTs by themselves will break the intergenerational transmission of poverty. And now it's not a shock. He's had similar implications in some of his talks in the past, but it's not something that one hears often, particularly as CCTs are championed around the world. We continue to hear that it does break the intergenerational cycle of poverty, although some legitimate questions are being asked about have we seen the results in the long term, and we haven't yet, although it may be too early. But that comment refers to two main problems. One is it refers to the fact that national economies have to create enough new jobs to absorb the new graduates who are coming out with their secondary education or their high school degrees. Otherwise, the plan simply doesn't work. But it also refers to the importance of an integral view of social protection programs and their interactions, how to link different types of social protection programs to ultimately achieve the sort of developmental outcomes you need. And while on the one hand it's not that easy for governments in the short term to create large-scale employment on demand, instituting a systematic mechanism for increasing people's savings and investment and building assets and livelihoods through a route that has been seen to be successful in another context, I think does offer a viable plan and can help to answer one of those essential weaknesses. The second criticism is one that I've had since I started working with these back in the first evaluation of Progressa in 1999, and I found that people, they love the program. They talk about how the children are healthier now and they're going to school now, and so on, but ultimately people really want to work. They say we love the program, but what we really want is the government to help us earn a living. And the second thing that I think is evident with respect to CCTs is that it's great for children. It helps them to possibly to transcend poverty in their future lives, but it doesn't do much for the current generation of adults. Now, that's not entirely true. It does, many of them encourage adult participation in health in health services. There is good evidence on empowerment of women in a number of different dimensions. But from an economic perspective, it essentially really focuses on the next generation of adults, not the current one. Now, in some ways, it's not an entirely fair critique of CCTs. It's not really intended to address poverty in that way. It's intended to address long-term poverty. But it does nonetheless say that CCTs are not sufficient on their own, and that a social policy needs to tackle these needs of adults with the same level of determination and systematic coverage that they approach CCTs and have done so well with CCTs. So again, I think the sort of intervention we're talking about today has the potential to begin to address that gap. The third criticism is one that is heard within the context of many different types of social protection programs and safety net programs, and that's the question of how long do people stay in the program, on what basis, when do you rotate them out, what is the criteria Okay, I guess I don't have as much time as I thought, so let me just keep trying to move on here. Essentially, it's the question of exit strategies, and so I think that this begins to address that need, and I had some more details on that, but I'll just go on. The fourth criticism is that CCTs don't tend to do much with respect to organizational development and collective activity, social capital formation. They tend to work primarily at the level of the individual, and while the savings schemes can do it the same way. From what I've seen in Peru, they tend to involve more of a collective ethic and more collective activities in a way that I think could help to inform the CCT model and actually bring about more positive effects from the CCT model itself. I think it's particularly timely, the intervention. We have a new book that's coming out on CCTs hopefully later this year, and the last chapter talks about the new wave, the second generation of CCTs, the next decade, and how they really need to be thinking about adapting their designs. And I think that a number of these, the sort of intervention that we're talking about today is really at the forefront of that. I had some more specific comments on some of the things I thought were good about the paper, but maybe it speaks for itself, unless you want to give me some more time to talk about that. But essentially, I think that one more additional argument could be mobilized in the paper, and I think it's something that I know that he was familiar with because I've heard him talk about it before. But essentially, it could be made more explicit in that the ways, the number of the mechanisms that already exist in CCTs with respect to the huge number of the army of beneficiaries that exist, the targeting data, criteria, and mechanisms that are already there, incorporations and communication processes that already exist, and a wide range of administrative systems. One of the key features of real social protection is that it's systematic, rational, large-scale coverage. That's something that CCTs do very well. It's something that microcredit, at least in the past, has not done very well. And so I think that CCTs could then could increase or improve the design implementation of approaches to savings in that sense, or those different mechanisms could work together. The challenges I think that that you'll confront in going forward, one is the issue of the objective of CCTs, consumption versus savings, and I think we need to begin to talk about that. But it's something that he was giving an example of the messages that come from promotoras, but I think it's more than that, in that the entire concept of the program from all levels, from national down to local level, is that it really is a consumption program. It's about increasing food intake and improving nutrition to improve school readiness. And I think that's the sort of thing that's going to come up in dialogues and trying to expand this concept. Well, okay, I'll skip the next point about anyway. Question of the size of the transfer and the implication of savings. There is the evidence that's cited in the paper with respect to investments from Progreso or from Oportunidades benefits, but it's not a very widespread finding up to this point. Generally, in the work that we've done in a number of countries now in Latin America, there's been relatively little savings and investment from CCTs, and there's a couple of reasons for that. One is the point that I was discussing earlier with respect to the way in which it's conceptualized. It really is seen as something as a grant for consumption, but also it has to do with the amount of the grant, and that varies widely. So I think that's an important design consideration in going forward. The difference between a country like Nicaragua, where you might have as much as about $30 over the course of the year for a child, versus maybe 10 times that amount when you put everything together in Mexico, does have implications for how much people can save. So it speaks to the question of whether you need an additional benefit added on to the existing CCT, a matched component, or how much of the CCT they're expected to save. There's questions about adjusting the amount for inflation and food prices, which is relevant in any CCT program, but nevertheless, when you're talking about savings, it may take on additional importance. I think that another issue that's important with respect to conceptualization of the linkage is whether or not they're concurrent or progressive interventions. The paper talked about a number of typologies, but I think an additional aspect of it is that there's one way to conceptualize it, which is what I referred to before as creating a new source of capital for the current generation of adults versus a graduation strategy, and those are two different things. And so I think that needs to be clarified, and that's something that I think policymakers are going to want to have a clear sense of in going into this. The attention to training and support, and I think Luis touched on this, but that has been one of the key aspects of CCT programs that have not been given sufficient priority. There are health and nutrition lectures, which are critical for increasing the long-term effects of the program, but they've really, because of the complication of getting the mechanism, the essential grant program off the ground, there really have been an underemphasis on training, and I think that's something that, and communications, and that's essential, and we've seen a lot of negative impacts or no impacts from programs that haven't done that well enough. There's questions around institutions and policy process and bottlenecks, and I'll just mention that that many of our findings from Progressa, as well as recent comments from Santiago Levy, are that some of the key issues are not in the design but in the implementation. Key questions around targeting, in terms of, do you use the targeting mechanisms? They're very different. They're very particular in terms of the poorest of the poor. For CCTs, do you also do that with the savings programs as well? And I'll just make one final comment. I had a number of other ones, but I'm going to skip those. One final comment, and that is, none of the issues, these questions, I think, are insurmountable. But I think it's important to keep in mind that when the architects of Progressa first tried to introduce this to the government of Mexico, they said, no, it's impossible. People, you can't give cash to people. You can't just distribute it out in the countryside. Different ministries are never going to work together. You can't target at the household level. You can't do conditionality. There's all these reasons why it was just seen as, this is just not going to work. And I think so as we go forward.
Thank you for that. Actually, though, I first want to compliment you and Yves on what I think is a great paper. Which is a really important contribution to this new collision of two very old areas, reasonably old areas, CCTs and microfinance. I could go on with the compliments, but let me, in the interest of time, maybe just focus on 3 points that I want to make. And I'll just say a few words about them. But before I do that, to maybe pick up on a couple things. One thing that Michelle has said, was also, I think, echoed in a recent study by the World Bank by Ariel Fisman and Shadi, about pointing out that there's a real need for a second round of innovations in CCTs. That the evidence is pretty good on a lot of things, transfer of income, change behaviors in some instances, but outcomes as far as education, change in levels of education and health, there's been less of a direct link between what CCTs are doing and the outcomes. And so complementary interventions are probably necessary. What should those complementary interventions be, I think, is really the unanswered question yet. And what Jamie and Yves have tried to do is say that one of those is adding savings services to conditional cash transfers. Coming from an organization, House at the World Bank, which works on access to finance, I could say I couldn't agree more. But let me say 3 things that are a little bit more critical, and I don't think do anything to undercut what you guys have said in your paper, but maybe actually augment and amplify the things that you've said. One, my question would be, why stop at conditional cash transfers? If we think that the delivery of recurring funds to recurring payments to low-income people in society is an entry point for financial inclusion, as a complementary intervention that could get us to those health and education and income outcomes that we're trying to achieve, why not look at unconditional transfers, and why not look at salaries, many of which can, large chunks of which can go to lower income individuals. To take one example, if you look at Colombia, the CCT program there reaches 1.5 million people there. That's the Familias en Acción program. But if you roll up all the unconditional transfers, such as Social Security, which goes to low-income households without a condition attached to it, and also the wages and pensions that go to low-income people, you're looking at around 7 million people in the population. So 1.5 million versus 7 million, we could be reaching more people. And if we take this out to a global level, I think our evidence that Sarah and I have tried to come up with is that at least 150 million people, low-income people around the world, are receiving a regular payment from their government. 150 million, compared to the latest information from the Microfinance Information Exchange showing that there's 99 million active microloans around the world. So 150 million people being reached by governments with a recurring payment versus the number of active microloans, 99 million. It's already reaching more poor people than microcredit. but on a much shallower basis. We think outside of South Africa and India that far less than a quarter of those low-income people are receiving that payment into anything that looks like a place that you could store it. So, you know, it's a payment and not much else in most of these instances. Second point, so my thought is let's look at more than just CCTs. Let's look at all these other kinds of programs. Two, I think we have to do a lot of work to convince social program managers that financial inclusion is something that actually helps them achieve their benefit, their objectives. I think it's far from a foregone conclusion, A, that financial people who work in the financial inclusion world can actually prove it to themselves what access to savings and transactional capabilities does. It's much farther from a proven point for social program managers to say, yes, financial inclusion is something that we ought to be looking at. So I think what we have to do is line up the evidence that is out there. And Yves referred to Thomas Dichter, who I think is probably one of the most critical people when it comes to microfinance and microloans. But I would just sort of respond to say that there is actually a good deal of evidence that's saying that access to savings, access to transactional capabilities, access to loans does have positive benefits for recipients and clients. We need to line that up for social program managers. I won't go any further into that point to just go on to my last point, which is to say that this also needs to be economically sustainable for banks. This is not going to be, unless we're going to get into the business of twisting banks' arms to offer services to poor people as a loss maker. That's something that they have to do, that's mandated. Then we need to find out how we can make this economically sustainable, and that's code for profitable for private sector banks to do this. And I'll just say a few things about that. I think that there is actually, sorry, Luis, one thing I do disagree with you on, I think there is a lot of interest from commercial banks in this area. However, I won't say that they actually know much about how to exploit this opportunity yet. So there's a lot of confusion with that. But in South Africa, Brazil, Colombia, Kenya, we've seen the largest banks applying for the contract to deliver these payments and offer more than just the payment. I think, though, the challenge is going for banks to go from seeing the government as the client to seeing the recipient as the client. And if I'm a bank, I would look at the G2P payments, I think very much as the way I would actually look at a loan, which is a future stream of recurring fees and recurring income for me, right? In one instance, it's the interest payments that are coming back to me in the future for the loan, but for a government payment, it's the future fees to deliver that payment down the road every single month or every 2 months. And that's attractive. A recurring stream of dependable income can be the backbone of a business model. That's a starting point, but not an ending point. I'll just say very few words about what some of the things we would need to look at to convert that opportunity into a profitable one and a sizably profitable one. Because I think one of the questions is banks have a lot of opportunities. Even if something's profitable, it doesn't mean that they would want to do it. They may very well say that's kind of small for us. So one thing is looking at very low-cost channels. What we've seen in a number of countries is not just government payments going towards electronic, but actually being done outside of bank branches, not even with ATMs, possibly with merchants that have been converted into cash handling agents. And if you look at Brazil, where one of the largest and best known conditional cash transfer programs is in operation, Bolsa Familia, 70% of the recipients there get their Bolsa Familia grant not from a bank, not from a bank branch, not from an ATM, but at a merchant which is acting as the agent of a bank. Technology. We need to be very careful about which technologies we're choosing. In Argentina, the government there elected for a magnetic stripe card, very much like the debit card. With all of the costs rolled up, it cost them about 1.3% of the grant to the payment instrument. But in Malawi, another institution chose a higher-priced smart card with a chip in it, went with a very high-priced vendor, and the payment instrument, just the card itself and the delivery through the switch, cost 20% of the grant amount, which is just over the top. And that was just a wrong choice on technology that led them to that. Scale, extremely important. For a institution, one called Fino in India, which is not a bank but works with banks to deliver these payments, if they rolled up all of the government payments in India, they estimate the revenue would be $125 million for them for this payment processor. They work with State Bank of India. $125 million is actually a drop in the bucket for State Bank of India. It's 1% of their gross income in the last fiscal year. So if you got all of the conditional cash transfer programs, the unconditional cash transfer payments in India, it wouldn't be very big for the biggest bank in India. A small firm like Fino, though, actually sees that as extremely attractive. So one of the questions I think we should ask, and I'll make this my last point, is who really should be delivering these payments? Is it the biggest banks, or should we be looking at smaller startup that may find this to be really attractive and may want to do the work to figure out how to make this economically sustainable? Because they see it as their primary business, not as a sideline. So let me wrap up there and say again, congratulations to Yves and to Jamie. I think the paper is a great contribution. I really enjoyed reading it, and thanks for the opportunity to be here and comment on it. Trapped in here.
Well, this is my first time in the New America Foundation, and I'm delighted to be here. And thank you for inviting me. Thanks to Jamie and to Yves for a very interesting paper, as you heard from Jamie, and as I'll also tell you, I'm far from an expert on CCTs. I only know a little bit about them, and was delighted to have the opportunity to come and hear about them. I know a lot about savings for poor people, but not about the CCTs, so for me this was especially interesting. Just a couple of quick comments on some of the discussion, which I found also, along with the paper, very interesting. I think that it's important to say that savings is not new. It's not like everything began with microcredit. Savings has been around for a long, long time. As you can see in the paper, the double bottom line paper by Bob Kristen and Rich Rosenberg a few years ago. They looked at about 3,000 what they called alternative financial institutions and around the world, and they found basically as about 4 times as many savings accounts as loans, and it said it didn't vary much by region. So savings has been around for a long time. It just hasn't got the attention so much of the microfinance community. There's an awful lot of discussion and a fair amount of hype about microcredit. I do agree that it's not a human right, but I also agree with Mark that basically microcredit and savings in microfinance have been extremely important. And we'll talk a bit about that in a minute. But I also wanted to say that the private sector is very much interested in microfinance and in savings. This wasn't true some time ago, but over the last decade or so, it's really picked up a lot. I mean, you've got BRI in Indonesia, Bank Rakyat Indonesia, where I worked for many years when they were starting. They've got 25 million savings accounts in one bank, all in the micro banking part of the bank. Then you've got Equity Bank in Kenya. You've got the 4 big private banks in South Africa. You've got all sorts of banks coming up, lots now in Latin America, and so on. So, I mean, there is a real interest, and it's growing rapidly in the private sector in microfinance, commercial microfinance. And the third point I wanted to make, just coming out of the discussion, is as I said, I really do think microcredit, microfinance with savings and so forth really are playing a role in the world, but I don't think that it is their role to cure poverty, even though there are people who will tell you that microcredit will cure poverty. I wouldn't take that too seriously. Microfinance is a very important tool in the poverty alleviation toolbox. But as somebody said, we also need employment and other important things like that. Sorry, I can't see that. Okay, you said about roughly 10 minutes. That's good. Anyway, so I do think that I forgot where I was. Oh, yeah. I just wanted to say that there are a lot of other tools in the poverty alleviation toolbox, and microfinance is extremely important, and savings is very important. Now, as I told you, I don't know much about CCTs. I do know some, and I know something about them, but I'm not an expert on CCTs. So I thought what I would do would be to start with what happens in savings for poor people if you're looking at banks, profitable commercial banks that of different types that provide savings and that have become expert in this over the years, some of the ones I just mentioned and others. What do they do in order to provide savings to their poor clients? And then come around at the end to CCTs to see where the two may or may not merge, which is, I think, rather interesting. I hadn't thought about it before this. Now, I have a lot of experience with banks, central banks, ministries of finance, and so forth on how to do microfinance, both credit and savings, but I'll talk only about the savings part here. So when banks go into savings, into microfinance, but I'll mention just the savings here, what do they look for? Well, they try to find out what's the demand. And what I have found does not vary hardly at all around the world in terms of what poor savers want. And basically the bottom line is they want very close to what you and I want. And they come up with that quite originally. I mean, they think it through, and that's what they want. Well, there are very few perhaps religious or cultural restrictions in particular places or whatever, which I won't get into, but leaving that aside, you know, what do they want? What do poor savers want? They want, number one, security. That's always number one, pretty much. Two, they want convenience. It's got to be located near, as was mentioned. It can't close when they so early that they can't get there, and so forth. One thing which is not as well understood as it should be is that they want liquidity. They want the option for liquidity. They may want more than one account, one of which is a liquid account, the others of which are not, have other advantages, but they want to have the option for a liquid account. And almost all of them have a liquid account, plus, if they want, another account of some sort. And this is, again, not so well understood. They want confidentiality, and that's hard to arrange in a lot of programs. It's a very big selling point for the larger banks that can offer basically confidentiality in savings. Then they want, and this is very important to poor savers, they want appropriately designed and well-delivered mix of products. And that's something that a lot of other kinds of programs really don't and can't at the moment offer. They also want returns, although that's generally fairly low on the list. And they want access to loans. And another thing which they want, but this one they don't articulate so much, but when discussion comes around, it comes out. They want that this, for many poor people, savings is basically their only legally recognized asset. And this is a very important point. It doesn't come out as much as all the others, but it's there. Okay, so now what do banks have to do to provide all these things? And they do. Banks can provide all this. Informal savings cannot. They can provide some, but not others. Some provide A, and some provide B, and so forth, but can't provide them all. So banks have to concentrate on management. It's this stuff just cannot be provided without management, and you need to think about security and cash management. You need to think about your locations, your convenience factor, and so forth. You've got to have demand-driven accounts based on what these people want and your mix of products. You've got to have well-trained, friendly, respectful staff. You can't treat these people like they're poor and ill-dressed and generally unpleasant people to have around, and unfortunately there are places that do that. And you've got to have appropriate IT and so forth. Now, if I come now to that's among the things that banks do to be able to provide all of what poor people want. It's a big job. The key, however, is management. You don't get the others without the management. And it's not easy to manage, especially when you have to manage rapid growth. I mean, really rapid growth. It's very complicated, and you really need very good managers, and that cannot be overemphasized. Okay, if we now come to CCTs, now please remember, at this point, I'm telling you what I've said so far is what I have learned for many years. What I'm saying now is something that I have just begun to think about, and I only know a few CCTs, and of course I enjoyed the paper a lot. Now, there are some similarities, it seems to me, between the CCTs and the banks that provide poor people with savings. The aim of asset building is the same. There are payments through bank accounts. Of course, I gather it's not quite even 25% yet, but everybody hopes that with the CCTs that's going to grow, and it seems likely, and that's a good point. As a means to active social and economic growth, I think everybody agrees on that, the positive effects. And then, of course, the linkages of various kinds to banks. I find one thing particularly interesting, which is that in all my years of talking to savers in banks, poor savers, I always ask them, well, you know, as you're talk to people over time and their income begins to increase, and I say, well, you know, what are you doing with the new income? It's almost always the same. There might be slight variations, but the three top things are: one, I'm improving my family's nutrition; two, I am sending my kids to school; and three, I am using my money to be able to have better health care. And so in some sense, you're getting that as the back end rather than as the front end. It's not like you're made a condition to do that. It's what people want to do anyway, and as soon as they can afford it, that tends to be their priority. Now, I do have one major comment or concern, I should say, and I leave it to all of you to tell me if it's a reasonable concern or not, because it's about CCTs, on which I'm not expert. But I am concerned about the fact that the few CCTs I do know about don't seem to me to be able to offer the kinds of security for savings that are necessary. There's a comment in the paper about innovative CCTs are increasingly easy to design and deliver. And that is correct, I think. But it's not correct for savings. Savings is much more difficult than payments. And if you really want people to have savings accounts where the risk is well managed, you've got to put a lot of effort into it. So I worry about these shopkeepers. They are not, the ones I know are not managing cash very well. You know, somebody comes in, they put their savings, they bring in their cash, then they have to send it electronically to the bank account, but then the person comes back in, they want to withdraw, and either they don't have the cash or there's a problem, or too many people come at once. There seems to be not really worked out very well. Whereas a bank, you come in, you get your money, and you can get it electronically also, but it's there. I mean, there isn't a cash problem. And there are a variety of other things. I worry about the supervision and the record keeping in these shopkeepers because they don't seem to have much training, if any. And so I ask, you know, what if the money is lost and people who run the programs don't seem to know, you know, what you would do if somebody lost their savers' money, or for that matter, if the shopkeeper was robbed. There's a lot of confusion in my very few examples of what's happening, and the cash management also refers to liquidity and so forth. Confidentiality is pretty much not possible. Mix of products, that's in the future, I think. That's when they really the CCT people really get involved with the banks. But for the moment, it doesn't seem to be there. They really do need staff members, not just shopkeepers, but people who know what savings are about and can explain it to them in a friendly way, and so on. And access to loans is, for the moment, it seems to me, somewhat improbable, problematic, really. It's going to take time, and loans would be quite difficult. So I'm just seeing a bunch of things here that maybe are working and maybe are not working. I suspect they work better in some places than in others. But all I can say is that the big banks who do savings for the poor people right has taken them some time to do it, but they do it extremely well. And I think there's probably some lessons that can be learned from this. Not that the CTs can replicate this, but they can think about how they might move forward with banks in such a way that people will have their demand met by their bank accounts that they're getting there. So I think that the goals and the savers themselves are much the same in this. Just in a concluding remark, that the low end of the bank microfinance savers are very much like the CCT clients, it seems to me that here my questions are not about the aims and not about the things that they are succeeding in, but about the security of the savings, about the ability to really meet the demand side of what poor people want for savings. Thanks.
Okay, actually, I had said to Eve that don't worry, you'll have time to react to all of the comments, but we have actually gone over our time already. We started a little bit late, but from afar it was a little bit hard to hold a hard line on time with everybody. But we do have a few minutes that we can take. If you want to stick around, we can take a few questions. Give Eve a few minutes to react, but please feel free if you need to go now. Go ahead, but we'll continue on. I think for about another 10 minutes. Take a handful of questions and then we'll wrap up. Okay, and if you just would please introduce yourself and your affiliation and direct your question to somebody.
Monique Cohen from Microfinance Opportunities. Thank you all for a very interesting morning. I have a question that relates to CCTs linking to savings and banks. There is an assumption that was implicit that if we get people into banks, they will know how to use them. And I wonder whether that is a really valid assumption. Yes, I agree with Marguerite that people want to save and how they want to save, but I'm involved in financial education, and we've done a lot of work on looking, for example, at if you get remittances into the bank, do people know how to use them and leverage the bank's services? And I think that in this case, I would ask the same thing. So you've got all these accounts. What is the real usage rate of the money? What happens when the program ends? But what are the behaviors that people have, and do they know how to effectively use the advantages of a bank to serve their financial needs? Because in the end, it's the use of the financial service and using it to work for them that is really important. And our financial education research shows that this is a mixed bag.
Okay, so Eve, do you have a reaction to that briefly?
Yes. In a minute. It's key. What you say is key. It's impossible to think about a CCT saving linkage without a very, very strong financial education system. And problem is, how do we give, and you know more than anybody here about that, how do we give massively financial education, ad hoc financial education to millions of people? I mean, there are few microfinance opportunities probably knows more than anybody about that, but there are few examples of massive financial educations worldwide. Very few examples. In fact, I don't know any. Maybe there are, but I don't know. We know how to give financial education to 10, 20, 40,000 people. I think we don't know how to give financial education to millions of people. I'm not speaking about the internet connections or distant learning, that kind of thing. That doesn't apply to our customers. That's another story. And it's complicated. We need technology, Mark. I don't know. We need to think about that. It's key. We cannot imagine a saving mobilization scheme or without CCT, without a huge and strong and well-organized, to-the-point financial education system.
Great, thank you. Let's go to Ray, and then we'll take you. And
Hi, Ray Boshara, New America Foundation. It's just a comment, but it's a superb panel. I wish we had another hour. It was amazing. Thank you all. I guess my question on financial education, how much is financial education a precondition for savings, and how much of it is a result of having a savings account that makes financial education more salient? I'll just pose it as a question. Perhaps we can talk about it after the break, but I think it's a really interesting question. Thanks.
Good point. Let's move on to...
I'm Steve Schafferman with IncomeSecurityForAll.org. I was pleased to hear a mention of unconditional cash transfers and wanted to know how much you're familiar with the idea of the universal basic income. There's actually a pilot project providing a basic income to everyone in the village of Ochivara, Namibia, that's getting dramatically good results. Increase in school uptake, increase in health care, almost complete drop in malnutrition, and a significant rise in small entrepreneurial activities. So it's been reported in the BBC, and I can give you more information, and would love to talk to you about that. And also in Brazil, they have a strong movement now to expand beyond the Bolsa Familia to a true basic income. And the Basic Income Earth Network will be having its 2010 meeting in Sao Paulo in July next year.
Anybody have a comment on that? Please go ahead.
Yeah, I've done a fair amount of research on unconditional transfers, mainly in southern and eastern Africa, and yes, there are impacts in a number of them, especially the larger, older, and do you see impacts on education? The main argument against having conditional cash transfers by quantity. On the other hand, we really don't have evidence on whether it did have the supply of services if you move the whole thing American context to experiment with them very carefully and specific to the priorities and the conditions of that context. But the evidence from America in the 3 countries that have had fairly good analysis have found pretty significant additional impacts on education. I wouldn't just throw out the idea. I think it's important to look at it, but very.
Good morning. My name is Mark Gallagher. I work at DAI, and I'm head of USAID's Worldwide Fiscal Reform and Economic Governance Program. I'm going to come at this from a macroeconomics point of view. Mr. Mori, you mentioned in the very beginning that pretty much at the macro level, Bangladesh is still poor. And so all the rest of the discussion has been pretty much micro level, however. I want to link what I'm saying now with what Ms. Robinson said. There is theoretically no theory of savings. There are theories of consumption, and savings is what's left after you don't consume. There is no empirical evidence that I've been looking for this for years at a macro level that the return to savings has anything to do with the amount of savings. It's interesting that Mrs. Robinson mentioned return as something that's very low down on the list. I do believe that there can be great service provided to poor people who would like to save in a more formal setting. And I think the 8 points, that Mrs. Robinson mentioned are points that make a whole lot of sense. But the concern I have is, given, if anything of what I'm saying is correct, and if what Mrs. Robinson is saying is correct, I don't understand why we need to subsidize savings. And I don't understand how these conditional cash transfers, how we can prove empirically that these actually improve savings, even just amongst the target audiences. And so these are my concerns. And I'm sorry if I'm an outsider landing on your shack here, but these are my concerns.
Oh, sure, please.
Well, I think that's a very interesting point, linking both the macroeconomics and what savers want. It seems to me that the CCTs themselves, as far as giving money to poor people, leaving aside for the moment the savings, if I separate that from the mix with the savings, I have very different viewpoints. I think the CCTs are very good things in and of themselves. On the savings side, I am a lot more skeptical, in part because it's possible to do the same thing through large banks, but on the other hand, the large banks have to want to do it, and we need more of them. But on the other hand, more are coming. But you take the really big, good banks in Africa, in Asia, in Latin America that are interested in microfinance, and they're doing a great job. And those clients, who are the ones that I know, they, as I said, as soon as they get their income, they're not getting any subsidized income. They're just getting savings and loans and building up their assets and their income. And when they have that, then they're doing the nutrition, the health, and so forth. So it's coming around the other way. So I have some. I think we agree on a number of those things. I'm not saying it's impossible to link savings and CCTs. I don't know enough about the CCTs to know. Other people will know better than I. But I know it can be done in another way. But on the other hand, it relates to Monique's point about client literacy, because on the one hand, yes, you do need client literacy and a lot of work on that. But on the other hand, you've got to train your bank staff, because if the bank staff is terrible, then the people aren't going to come.
Eve, do you want to react?
Yes, maybe in a minute. Essential point you raised. I personally believe that yes, incentives are necessary. They are needed. They are key. It's time bound. It's just for a short period of time, around 24 months, according to our experience, but it might be shorter. And it's needed for a very two reasons, basically. The first one, incentive is to be seen and as a financial education investment, in parallel with formal financial education. It is a way for new customers, never banked before customers, to get accustomed to the use of a saving account and realize the benefits of monetary savings. I want to say that and insist on this. It's key, it's essential to me, but it's time-bound. It's for a short period of time. And it has to be seen as part of the education, financial education package. No? And it's cheap. When we compare the cost of a CCT program, typically, I don't know, $50 a month, $500, $600 a year per family, per beneficiary. When we compare this to financial, to those time-bound incentives, it's just nothing. I mean, let's take an example. In Colombia, for instance, average cash transfer is about 180,000 pesos. That is about, let's say, $180, $500 a year. On the average, a beneficiary benefit from the program, let's say, for 10 years, to make it just short. That means that the government will pay them about $5,000 to $6,000 in 10 years. The saving incentive part of all this package would be $100 and $200, including the financial education. $100, $200 compared to $6,000. I mean, just irrelevant in a way. Not irrelevant, but so I think it's very, very important. The second reason why it's very important is linked with the banks. I mean, banks need to be interested in this new market niche. They need to have average deposits above a minimum level from which they start earning money or they stop losing money. We designed a first matching grant mechanism when opening an account in order to reach this level very fast. And it's necessary for the bank to be interested. That's the other reason why incentives, one-shot incentive is necessary. At the beginning, afterwards, and after a while, banks realize that this, this market niche is interesting, generates returns, and then progressively, banks' marketing budgets would replace.
Right.
I think it's key. We don't need incentive for learn to the poor how to save. I mean, they as you said, they are saving since thousands of years. I mean, they don't need CCTs to save. They don't need saving mobilization scheme. They don't need anything to save. They do save. The poor who doesn't save is dead. I mean, it doesn't exist. It's just as simple as that. The incentive is not for them to learn to save, but it's for them to learn to interact and get accustomed to the use of it.
Sure,
really brief
please.
Comment
Yeah.
that I think amplifies what Yves was saying. I think figuring out who is going to pay for this and how that's going to be sustainable is a critical question here. Let's take a couple things as given. One, if we say that poor people save, a lot of evidence says that they do. If you take that as a given, we still have a question of whether a bank account is better than the mattress. Under what circumstances it's better. That's important because it says how much the low-income person themselves may or may not be willing to pay for that product that is being offered to them. Two, if we say that it's a time-bound thing and the government can pay for it for a certain period of time, and implicit in that is that the government doesn't want to subsidize this thing in perpetuity, then under what circumstances does the bank begin to see that amount of money, that revenue, profit pool, is it profitable? But if it is it big enough compared to their other opportunities? So I would say if subsidy actually is necessary here, which I think it is in a couple instances, the one that we're not talking about is subsidizing banks to figure out how this will be profitable so that they, in fact, will want to do this on their own. And it's far from a foregone conclusion in my mind that it will be profitable and adequately profitable for banks to want to do this. But we need to figure that out. And subsidy, I think there's a role there for underwriting the cost of experiments and analyzing those experiments so we can really see what the costs and what the revenues are and build products that make sense for banks to want to offer.
Right, and I would like to include one point, and I'll let everyone have one last word, and then we really do have to wrap up. But on the topic of subsidies and incentivized savings, there is quite a substantial chunk of the paper that discusses current and past research on incentivized savings that has been completed, and it shows the impact on the individuals, on the families, which are quite substantial, not just economic and financial impacts, but also social impacts. So I agree with Mark's point that we should be looking at the business case for this and how this will work for the banks and thinking about subsidies in that way. But there's still a lot that we know, and there's still a lot to learn about how subsidies and incentives for savings can impact not only the very poor and the poor, but others who are underserved, traditionally excluded, who haven't had the same. What we know here in the United States, there are a lot of us who have subsidized savings. You know, my 401k is subsidized savings, but it works for me. I have those incentives. I mean, from a macro, yeah, there are these macro issues, but and I take your point exactly on that. But when we talk about impact on the poor and the very poor and their opportunities and their futures, I think it's important that we focus on them. So let's give everybody one last opportunity to make a final comment, and then we have to wrap it up. Go ahead.
Okay. Short comment. When I was saying that, making my comments about microcredit, I wasn't meaning that microcredit is useless. I was just saying that microcredit is not for everybody. It's just for a few percentage of the poor and very poor. That's it. I think it's important to say that. Microcredit is not for everybody, but micro-saving or savings is for everybody, because the poor that would not be saving would be dead. We are not saying the poor, please save in a bank in monetary terms because it's better than any kind of traditional forms of savings. We are just telling them this is a new instrument. Please use it as you want in parallel with other forms of savings. And it's exactly what they are doing. They don't need anybody to learn about that. I mean, they do realize that saving in a bank has got those tremendous advantages, like confidentiality, as you said, by the saving. Well, anyway, liquidity options, etc., etc., all kind of things, security, all kind of things that is more complicated when saving under the mattress.
We have to move on. Sorry, Louise.
Just to separate, I think it's important to separate what the program, what is optimal for the program to do from what it's optimal from the government to do. This is a comment I got from a director of a program. If I see that a lot of my people start saving, then I would be really worried about how well I'm targeting the beneficiaries that I want. This is a program that wants to identify people who cannot spend on basic nutritional necessities and wants to give them the added funds to make those expenditures. So we know that they do save and it's costly, but it's not that clear that the program has to do this. The program has the potential to negotiate options with the bank so that the households have an option to have a bank account, and then you can think of other programs that can work with them to have additional incentives. But I think the program should concentrate on doing what it's supposed to do first well, which is nutrition and education.
Yeah, I just wanted to comment very briefly on the cross subsidies. That is to say, the big banks around the world that are particularly successful in microfinance and commercial microfinance, basically what they're doing is they are simply cross-subsidizing. They are taking a loss on the very low income accounts and using their larger bank account holders to cross-subsidize them. And they're doing this with an interest both for microfinance in general and for kind of the long-term efforts of the bank, bringing up people who hopefully will be better with their use of bank accounts and other possibilities, and then will move on in time, and their children will come and so forth. They're using the cross-subsidies, and a lot of banks are doing this. All the big banks that I know of that are really successful in microfinance are using cross-subsidies for this.
I'll just want to maybe briefly, I'll just reiterate at a very high level some of the main messages for me. There's a clear need for a second round of innovation when it comes to CCTs. They've done great things, they've accomplished great things, but I think most people who have looked at them say there's some limitations in terms of, for example, breaking the intergenerational cycle of poverty more and when more complementary interventions are needed. Looking at financial services may be that. I would say, though, why are we stopping at conditional cash transfers? Let's look at a broader range of government payments, and that would give government even more leverage to actually negotiate a better deal for low-income people. But I think to even get to that point, we have to really pay heed to Luis's point that it's far from clear to social policymakers and program managers that financial inclusion is something that they ought to be worrying about. So I think it's incumbent upon us, those in the financial inclusion world, to line up that evidence and make that case if we're going to hope to build common cause with folks in the social protection world. And finally, that this really isn't going to be a durable, continuing into the future kind of an intervention unless it makes sense for banks. And I would say that the piece of subsidy that we ought to also be adding on is helping banks figure out how to make this into a line of business that they want to pursue and that is profitable for them and sustainable.
2 points that came up. One is just the question around shopkeeper model is not a very good one, but many of the programs are highly centralized, very well managed, just the money goes. Problems with people on the way home, but for the most part, one of the things that CCT programs have highly efficient, centralized systems, and there's some disadvantages to the centralization. I think that's that in the context of this relationship is centralization versus non-centralization, because certainly some of the savings, some of the strengths of decentralization. But I think that that's something that actually could be a strength of that CCT actually get the governments who have large-scale programs on board to and management systems. However, it does then raise the point that Louise raises, should it be the same people? And that's something that comes up in the context of many discussions of, do we add on ECD, do we other sort of interventions do we do when we're innovating and looking at this next generation? Should it be the same people that are already overloaded and not able to do everything they're already doing well enough with respect to CCTs? Should it be somebody else? Then you get into all the aspects of interagency. Thought about enough about the importance of it, but I do think from the perspective of CCT programs is to really take that as a caution in the implementation process, not doing the education part as well as everything else. Recognize as important. Education is actually a conditionality of most of the, and yet it just doesn't get the priority because doing everything else is very, I think, in going into a program that's linked that real attention.
Okay, great. Thanks so much, everybody, for sticking around. I mean, obviously, this is a discussion that we're just beginning. I hope that it continues. There's a lot to learn from experience and from everybody here and from what's going on the ground. So hopefully this is just the first of many discussions we'll have about this, and there will be new evidence and new rounds of innovation and testing, and we'll be back together again soon to say whether this actually can work or not, or what are some other models that we should be thinking about, etc. So thanks for your patience. Thanks for sticking around a few extra minutes for the Q&A. Thanks everybody on the webcast, and some of us may be able to stick around to answer a few more questions, and otherwise we'll see you again soon. Thanks for coming. Thanks.